You could be throwing away thousands over a lifetime.
Our entry-level data plans start at just $20 a month. And for a limited time, switch and get your second month free. Call 1-888-FREEDOM, visit consumercellular.com or a store near you and get your second month free today. Plans include $5 credit for auto pay and
At Audion Hearing, our mission is simple: to make better hearing affordable for everyone. We're proud to offer high-quality, rechargeable hearing aids starting at just $98. Clear, comfortable, and ready to use right out of the box. And here's a study worth hearing. Research shows that wearing hearing aids can reduce your risk of dementia by up to 61%. Join over 1 million happy customers and hear the difference today by going to audionhearing.com. That's AUDIEN hearing.com.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
And Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is, who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning, happy Monday. Welcome back to the Financial Exchange. Hope everyone had a good weekend out there. And obviously our top story of the day is going to continue to be Iran, oil prices, Strait of Hormuz talk, but we do kick off bank earnings this week. We heard from Goldman Sachs just this morning and their CEO David Solomon on the rising volatility and broader market uncertainty. We will get reports from JP Morgan Chase, Wells Fargo, Citibank, Bank of America, basically every major financial institution you can think of over the course of this week. If they are a large national bank, then they will tell you how they did this quarter. And all of this continue to operate amidst the uncertainty, obviously, in the Middle East. It's Mike, Paul, and Tucker with you on a Monday. And, interestingly, we kicked off the day, when I logged in this morning first thing to take a look at pre-market trading, we had the Dow off by more than a percentage point, the S&P down about 2/3 of a percentage point. I think that was right around 7 a.m. When I was checking in at that point. We've now rallied out of that territory. NASDAQ is currently up 1/4%. The S&P is flat. Obviously, with the weekend news, we've got oil prices up. And so as we kick off the week here of the, I'm not sure I can keep this straight anymore, 7th week of strikes and war in Iran, we've got oil prices for May contracts on West Texas crude sitting at about $102 per barrel. And so big picture here, I'm just trying to define how we contextualize this moment in the war in Iran.
It is just continues to be a constant struggle to figure out, Mike, where we stand here. And I believe we're set to set off the blockade just moments ago in terms of the impact on the Strait of Hormuz. And I was a little surprised that markets did sort of pump the brakes on the sell-off that we saw earlier this morning, where I did feel as if this was going to be a pretty down day, given that you would think that this is a relative setback for the 2-week ceasefire that we had in place. There does seem to be several deal points that the U.S. and Iran still seem rather far apart on. So a little surprised. What do you think is the reason behind some of the optimism or the turnaround that we've seen early in markets from what the pre-market trading had looked like?
Where I land on that, Paul, is that I don't see us as any substantially worse off from a tension standpoint than we were a week ago. That's kind of where I land is, a week ago we were talking about potential strikes on energy infrastructure throughout Iran, at which point we all know they would retaliate and strike infrastructure in surrounding countries, taking a whole bunch more stuff offline. We had these talks set up for over the weekend. They failed, but on the other hand, while they failed, we are not currently looking at the screen and seeing explosions occurring across Iran. We're not seeing any substantial, right? Like when we talk about the escalation here, the escalation is that the United States Navy is not going to allow ships that pass through Iranian ports out of the strait.
Yep.
Is that substantially different than where we were a week ago? Not really. Traffic was barely moving through the strait prior to. This may be an escalation in tensions that, indicates the U.S. and Iran can't reach a deal, but it also has not gotten to the point where we're lobbing bombs and missiles and drones at each other and taking civilian infrastructure offline. And so I will admit that I've been surprised this entire time about how optimistic investors have been that a resolution will come to this event quickly and won't damage markets. But I just see this as a continuation of that overall piece. And also important to acknowledge that what markets are doing 40 minutes into trading, which is where we are, signifies nothing about where they'll be at 4 p.m. today. So I think we should, pump the brakes on that too, because there are plenty of more hours in the day here to see where things go. But in practice here, over the course of the last few weeks, traffic has barely been flowing through the Strait of Hormuz. 5-6 ships a day have been the indications, maybe, certainly under 10. With this most recent announcement, that does choke off, one remaining supply of oil that the Iranians had been attempting to profit from. It's not just oil, it's other commodities as well. So it does choke off that piece. But in terms of the global supply chain, I'm just unclear about how the actions today change the status quo, really, because, seemingly traffic wasn't really flowing before, and it's still not today, which once again brings us to the overall piece to keep an eye on, which is what matters is not the words. It does not matter that they are announcing talks or announcing a ceasefire. Those all might be indications, but what is important to the global economy and what will be important to markets continues to be traffic through the strait and whether or not it is flowing. And I think, in spite of the president's words, was the national address by the president 2 weeks ago now, or was that last week?
Recently.
I think that was last week.
Yeah. Time's flowing together here a little bit, but the president made the point that we can declare victory here without reopening the strait, and I think the actions on the ground speak to the fact that I'm not sure he really believes that. And so, what we are seeing now, the blockade, the not quite cessation of hostilities indicates to me that, there's some public statements that can be made, but there are also realities on the ground, and the realities on the ground are dictating the military actions at this point.
I just wondered that, like you mentioned, there is still some ships going through the Strait of Hormuz, and largely it seemed like there was about 2 million barrels per day from Iran that was going in terms of oil and gas through the strait. And this potential blockade, while I understand that 2 million barrels per day is not significant in the global oil and gas market scheme of things, but I just thought the market would be more concerned about perhaps Iran getting irritated with that maneuver and taking other steps to perhaps cause more sort of economic pain through that area in the Persian Gulf as a retaliatory response. And again, granted, we're 10 minutes into this, so it could be a story that just is nothing by the end of the day here. But I did expect to see a little bit more pessimism, but it's been a surprise, like you said, the whole year to date, really, from what we've seen on the market, a market that's barely negative on the S&P 500 4 months into the year and a month plus into this conflict.
Yeah, to be clear, the S&P 500 for the year currently sitting down 0.6%.
Yeah, after all this.
Right? I mean, we have private credit concerns. We have inflation concerns. We have supply chain disruption concerns, AI tech valuation concerns, stagnant labor market, and a, pretty significant all-out conflict in the Middle East. And equity investors are saying, stocks appear to be worth, less than 1% less than they were on December 31st is the answer here. And so I think my point would be investors right now are not willing to sell their stocks unless they see the evidence of the disruption that is going to hurt those companies. And we've talked at length about how the U.S. is more insulated from that than just about any other country in the world. And so the actions of investors may not be logical, but I'm not sure there is a very logical response to these events right now. It's a pretty binary choice, and even those analysts and CEOs out there that I've listened to that are talking about being good stewards of their clients' money are all asking the same question, like, what advantage do we have here if we decide to pull back on stock risk or load up on cash or treasuries when you have such a binary choice that is being made by a very select, limited group of people? The lesson that investors are taking for the time being continues to be hold pat and hope that all things resolve themselves in a reasonable fashion. We've got to take a quick break. When we come back, a few more thoughts just on choke points, supply chain disruptions, and what these events could mean for the U.S. economy. That's next on the Financial Exchange.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Well, again, if you're just joining us here on the Financial Exchange, the U.S. blockade of the Strait of Hormuz just began at 10 a.m. Eastern Time to, quote, any and all ships trying to enter or leave the Strait of Hormuz. That's what the President spoke of. The U.S. Central Command Center later added the caveat that we will not be impeding freedom of navigation for vessels transiting the strait to and from non-Iranian ports. So I believe that that's the real answer here, is that the U.S. is blockading anything that stops at Iranian ports. But frankly, there wasn't a whole lot moving through the strait that wasn't stopping. Like that was the whole limited ships that were navigating the strait. We're only navigating because they kind of had the blessing of Iran and were stopping at those ports and probably paying some sort of bribe in crypto. And so the presumption that I'm seeing by most parts is that traffic simply will not be flowing through the Strait of Hormuz so long as this blockade is occurring. In reaction, oil prices are moving up today. You've got the May contract for West Texas crude sitting at about $101 per barrel, up 4.75%. And Paul, are you on CNBC right now?
Yes.
Have you ever seen CNBC break out the May versus June contract for crude oil? Because this is the first time I've ever seen it. Which, again, is only interesting in the context of this is a site that we visit every single day, and they are getting nuanced enough to say, yeah, we need to be breaking out what it's going to cost for oil to be delivered on the May contract versus the June contract. Right now, there's about an $8 difference between the two, and you're seeing them move in tandem. But it is pretty fascinating to see that broken out for, again, first time that I've ever seen really any site other than some serious commodities trading sites break that out. I think there's all sorts of pieces being written right now, and Wall Street Journal has, a panel of economists to forecast the war's impact, which I can't think of a whole lot of stuff that would be more useless than a panel of economists telling me how the war's impact is going to play out, because they don't have any better idea. Like, we
could be lumped in that group, honestly. No one has any better idea than them or us. We're all in the same playing field, besides the administration, of course.
Economists caveat the living hell out of everything they say to begin with, and to ask them to play out how the war's impact might disrupt the global markets or economy is just not terribly useful. And I say this with all due respect to economists who are, better trained and more well-educated and smarter by all accounts than I am. You're asking them to do something that they are not capable of doing. Instead, what they're going to tell you is, well, should the strait remain blocked for 8 weeks, then these are the potential disruptions that you might see, and that's how that plays out into inflation. It's not a terribly useful exercise in my mind. I did find the first paragraph of their article to be interesting, though, and something that I kind of disagree with. They say recent months have been marked by slower growth, stubborn inflation, and a weaker job market. And they kind of identify those as the main key threats. And I think those are things that we could result in. But when I think about this economy today and the triple threat that exists for U.S. equity markets, that's too general to me. It's three things for me that I am looking at right now. It's private credit. What's happening there? Is it really as bad as some of the investors who are trying to pull their money out of those funds seem to think it is? We've got artificial intelligence as just a general threat to the market. It also happens to be the biggest potential upsurge to markets, or catalyst to markets in the future. But we've talked at length about the threat to the job market there, threat to energy infrastructure here in the U.S. and the ability to build that out, the existence of chips and other sort of equipment, and then finally just how expensive the companies are that are benefiting from AI from a historical valuation perspective. And you have some degree of threat there, not even starting in on if you operate a software company who could be decimated by the new technology. And then finally would be supply chains. And the supply chains is entirely because of this event in Iran. But those are, to me, the real triple threats. And they could result in shortages. They could result in damningly stubborn inflation. It could result in problems with the labor market. But I think just talking about those generally without identifying what are the potential culprits here isn't a terribly useful exercise. The supply chain piece, to me, continues to be the most underappreciated piece by U.S. investors because we are just not living it today in the way that other countries are.
No question about it. I mean, what I learned most from the pandemic is how truly it is a global supply chain. And we've seen on numerous occasions, whether it's rare earth minerals and other examples out there, that if you get shut off from one access point or pipeline to a certain critical good for whether it's F-35 jet fighters or for components of cars, it really can have a lasting effect on all sorts of pricing across the U.S. economy. And that's the risk that we run here. We've talked about the impact of fertilizer. We've talked about the impact of helium on potentially semiconductor manufacturing. It just continues to astound me how intertwined everything is. And I feel as if with some of the market action that we were talking about earlier in the show, that hasn't been fully realized. Yes, the U.S. is a net exporter of oil and gas, but some of these other knock-on effects from the closure of the strait has me concerned, potentially, the longer this goes on. Semiconductor manufacturing, if there's any disruption there, then we are in really a difficult spot. Again, this is all early on to make a huge jump that this could be the crux of a collapse or anything like that, but it is really something that needs to be taken into account.
The severity of, I guess, the ability for countries to choke supply chains and really cause global economic problems, I think was just one of those things that was underappreciated by most people, myself included, up until the last couple of years. And I'm not just talking about Iran and the Strait of Hormuz, which is very clearly, what we are living today. But I think back to the last couple of years and the defining moments of what has caused U.S. policy to pivot. It's been these supply chain disruptions and the choke points and the threat of what might be to come. So, for example, when we talk about the U.S.-China trade battle, what really pivoted us away from that was the threat that, the United States might not be able to get any rare earths because there's this massive choke point in China where they pretty much produce everything. And unless we're willing to invest billions of dollars for the better part of a decade, we aren't going to be able to get battery technology. We're not going to be able to get magnets, and those things are a massive choke point. And I think more than anything else, that has been the lesson over the last few years is when we go and stage these events, countries' responses are now going to be, hey, what is the critical item that I produce or can threaten that will take down the rest of the global economy? Because that's what Iran's doing this time. That's what China did last time. And there will be another one next, depending on the events that take place. So that, to me, is the bigger lesson than anything else. In either case, we got to take a quick break. We're going to have a full market update next with Wall Street Watch. Stay tuned.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699. 5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
After peace talks with Iran came up short over the weekend, markets today are mixed after President Trump ordered a blockade of the Strait of Hormuz that took effect at 10 a.m., sending oil prices higher. Wall Street also sifting through the first batch of bank earnings from Goldman Sachs to kick off first quarter earnings season. Right now, the Dow is down 0.4% or 183 points. S&P 500 edging 3 points higher. NASDAQ up 0.2% or 54 points higher. Russell 2000 is up 0.2%. 10-year Treasury yield flat at 4.319%. In oil jumping 5% higher, trading at $101 a barrel. Goldman Sachs shares dropping 3%. After the bank reported a 19% increase in first quarter profit driven by record banking and market revenue. Goldman's revenue climbed 14% to north of $17 billion compared with about $15 billion last year. More bank earnings will follow tomorrow morning with JP Morgan Chase, Wells Fargo, Citigroup, and BlackRock. Meanwhile, after sliding more than 12% last week over fears that it will lose out to newer AI competitors, Palantir stock rebounding over 3% today. Elsewhere, Williams-Sonoma upgraded by Goldman Sachs, sending shares up by 2%. Furthermore, Goldman Sachs downgraded Best Buy, citing risk to sales post Q1 as higher memory costs worked their way into the price of computers. Best Buy stock is down 3% on that downgrade. I'm Tucker Silva, and that is Wall Street Watch.
As Tucker mentioned here, we are officially kicking off earnings season. We had Goldman report this morning, a bunch of banks later this week. Next week, we have some interesting ones, too, that are particularly relevant right now. So GE Aerospace will be reporting on Tuesday of next week. That's the 21st of April, as will Raytheon Corporation, RTX Corporation, rather, these days. So that's obviously of interest given the events in the Middle East right now. Not so much their previous earnings, but their statements about forward-looking stuff. Tesla will be reporting Wednesday, the 22nd after the bell. That's your first trillion-dollar company to go of the earnings season. And Elon Musk has spoken about the SpaceX IPO and how that might someday be combined with Tesla in some meaningful way. So that's obviously of interest for investors. Intel and others reporting next week as well. So big bank earnings week this week. We do get some other non-bank companies reporting. I think, is it Netflix that goes later this week, if I'm not mistaken? So all of those are of interest, but really, as things kick into high gear, it's those trillion-plus dollar companies.
Netflix is Thursday after the bell.
Thursday after the bell, yeah. So some big heavy hitters that will be reporting throughout the course of the next few weeks, and will certainly test markets in a new and different way. The Goldman news here, I was trying to figure out what exactly could be driving the stock down 3.25% in early trading so far. The biggest thing that I could point to, based on a comment from Wells Fargo analyst Mike Mayo, was about loan loss provisions. So bank earnings are different from any other sector, any other company out there. But one of the things they're required to do is basically guess at all times how many of their loans are going to go bad, and then take provisions for credit losses on their current earnings to account for those future loans maybe going bad, which, if it sounds like weird accounting stuff, you're right, it is weird accounting stuff, and it's tough to explain. But the point that the Wells Fargo analyst made is, look, the bank just made $315 million in loan loss provisions. It's an increase of 10% from a year earlier, and it's the bank's largest increase in loan loss provisions since 2020. Right. And there was this weird thing going on in 2020 that you might recall, where the entire economy shut down for, better part of a year. So that seems to be the insinuation there. I'm sure that I did not get to listen to the earnings call, but I think the single most interesting thing that any of these CEOs are going to talk about is private credit, their opinions on private credit, what they're hearing from their clients on private credit, and what exposure, if any, they have to the private credit space. I think all of them are going to face questions about that, and far more. It's not going to be impactful in the most recent quarter, but it's probably far more interesting than trading revenue, wealth management revenue, all of those other things that you can pretty easily forecast. Anything else you're taking a look at, Paul, when it comes to bank earnings this quarter? Because as we've talked about, you have to be pretty nuanced to get into the weeds of bank earnings.
Yeah, ultimately the main focus has got to be on anything in the private credit space and any impact, ripple effects on some of the major financial institutions. That's what we're really going to be looking at, because again, they weren't directly lending to some of these companies that we've talked about before that got into hot water, whether it be Tricolor or some of these other ones out there, but they were lending to companies that were lending to those companies, kind of acting as a intermediary. So any comment that they sort of diagram or diagnose there on the private credit space is important. Even in Solomon's earnings release this morning, he did have a quote saying that the geopolitical landscape remains very complex, so disciplined risk management must remain core to how we operate. So that last sentence there, I take out disciplined risk management. With the loss provision increase and that sentiment, it seems like he's perhaps just flagging that as something that they're trying to be disciplined on their losses and their debt exposure out there, given all the concerns in the private credit space at the moment.
Yeah, so I think that will remain the focus. I guess the only other piece that's interesting to me for some of these banks, JP Morgan and Goldman Sachs especially, would be, does what we're seeing right now in the Middle East and the market turmoil related to it delay any big events like IPOs this year? Right. So in terms of big names that are on the list for potentially going public this year, beginning of next year, it includes companies like SpaceX, which would probably be the largest IPO in history. It includes companies like OpenAI, the maker of ChatGPT,
Anthropic probably too,
the creator of Claude. So all of these have been tossed out as potential ideas, and these companies make a boatload of money on those transactions, but I think more importantly, I look at those as potential upside catalysts to this market continuing to rally. And if we get news that, they might not happen, we might hear from these banks about it first. So that's another piece worth paying attention to. Paul, one of everyone's favorite parts of the pandemic is coming on back. Surcharges popping up all over the place. First time really since peak COVID when these things were becoming popular, but we've got all sorts of new gasoline surcharges. Airlines are doing it. I don't think I've seen anything at restaurants, but what are we seeing when it comes to fun little surcharges everywhere we shop these days?
Yeah, it seems like the fuel surcharges are back. I know that I just have a local trash pickup service, and that they'll typically throw on a $5 surcharge to the monthly bill when gas prices tick up. Those smaller businesses, like a gas pickup that I don't have waste management or something that's a huge kind of conglomerate of waste pickup, those smaller businesses tend to get a little bit more of a pass. I can psychologically say, yeah, I understand why they're charging me $5 more a month because gas is at $4 a gallon. But you're also seeing it, like you mentioned, with the airlines on the baggage costs, and that's what tends to irritate people. Is you think you've paid for your flight, and then all of a sudden it's $55 a bag to check your bags. And really what this is hitting on is this phenomenon that we saw really around the pandemic, and the biggest purveyors of this have been over the years short-term lodging companies and live event ticketing. I think we've all had the experience, Mike, where you go to buy concert tickets and you're very locked in at it being $150 a ticket or whatever the number is, but then all of a sudden you get to that checkout point and it's all the way up to $225 a ticket. And this phenomenon is this lock-in effect. I've already committed to buy these tickets, but all of a sudden they throw this upcharge on me because psychologically in my mind I'm locked into making this purchase. They hit me with another fee at the end, and I'm less likely to back out at that point in time. Now, to be clear, in 2025 the FTC banned the use of that on short-term lodging and on live event ticketing, but this, what we're talking about now, is more systemic in airline fares or restaurants and things like that. It is something that really irritates people quite a bit. The bigger the company, I think the more frustrated people get. And I don't know how much this plays into it, but we did see a really low consumer sentiment reading back from the University of Michigan on Friday. It just is something that really grinds people's gears, and fully get it. But I don't think I've seen it as prevalent as it was before, but I don't know where people are seeing it, but I've just seen it. Airlines, I've seen it, but not as big as before, I would say.
One area that I actually am totally fine with it and actually like it, there's a restaurant that I go to. It's like a lunch place in an office that I go to pretty regularly. And all they do is they just say, hey, if you pay cash, we're giving you a 3% discount.
Yep.
And, obviously what they're doing there is avoiding tax. I'm kidding. What they're doing there
I did think
is
that
avoiding the credit card.
The credit card
The credit card fees are 3%. And so these tiny businesses that have zero leverage with Visa just say, you know what? We're not going to charge you extra. We're not going to charge you the 3%, I think, because the credit card companies don't allow it. We're just going to say, yeah, if you pay cash, you get a 3% discount. And I almost never remember to carry any cash with me. But I can at least appreciate it from the small business perspective of, this is actually really serious cost. And for low margin businesses like restaurants and other type of shops, it can really eat into things. So good for them.
You know what the worst lock-in effect is? I've used 1-800-JUNK before, and what they do is they'll give you a free estimate. So they make sure you take out all your junk to the corner of your driveway or wherever you're going to put it, and then they give you the quote. And this happened to me before. I had a mattress that I wanted to get rid of, and they said, well, that's going to be an extra fee to take it to the dump, and it's an extra $70. So I called them on their bluff. I said, all right, see you guys. Thanks for coming out. And then, of course, the fee magically gets waived by some supervisor. But that company really sticks. You got to stand tough, Mike. You got to stand down.
Let's take a quick break. When we come back, we're talking property tax hikes in Massachusetts. That's next on the Financial Exchange.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
There's a tiny little town called South Hadley in western Massachusetts, and they're featured in the Wall Street Journal today, so I thought might be worth talking about. So South Hadley has about 18,000 residents, and in Massachusetts there's a rule where if you raise your property taxes by more than 2.5%, you have to get an override from the town's voters, and that's what they are doing there. But they're asking for a little bit more than 2.5% here, Paul. What's the story?
They are looking for a 50% property tax increase over the period to be phased in for 5 years. So for people that are in South Hadley, where you've got a median home value of about $417,000, these are substantial increases to a population that doesn't want these almost 50%, 60% increases on their property taxes. For the average home that was $417,000, they have property taxes right now of about $5,600. With this proposal, they would jump up to $8,500 over the course of that 5-year period. And so the concerns that you have is, on one end, for residents, you don't want to see those increased costs, but also there are some pretty big risks at hand here in terms of cuts for people who take participation in after-school activities like sports and other really essential town services. And so it's this really big debate that you have, where in this piece they outline, of course, older residents who perhaps don't have kids that are benefiting from the school system are adverse to it because they're probably living on some sort of fixed income, whether it be Social Security or pension or others. They don't want that crazy cost increase. But on the other hand, you've got families that really want to lean on this increase in property taxes to fund the things that are so critical for their kids. And that's every town. They're no different than that. But it points to a bigger sort of canary in the coal mine issue potentially over the United States, that many towns are going to face these similar problems, where you are less in terms of state aid for these towns. The federal funding for the pandemic post that period has really come down quite substantially. So you're in this difficult spot where the only way that you can get this funding is to increase property taxes, but it puts residents in a bit of a bind, Mike.
Yeah, what's amazing here is that this is not, like you said, it's not terribly unique, and there's nothing special going on in this town. It's not that they are building some new $50 million school. It's not that it's that their health insurance costs are up 42% for town employees. It's that all of the funding that was previously provided by the state has started to dry up, and that's the part about this that I think is a fair point. It could very well be a canary in the coal mine. Not that every town is going to approve overrides like this, but I think more and more town budgets are going to be faced with the necessity of raising taxes, and how their residents vote will largely drive the quality of education, the number of people on staff and what benefits they receive, and their ability to attract real talent like teachers, police officers, firefighters, etc.
I also wonder with Boston, just on the city front, they're staring at a commercial real estate market for the office space that is in a real free fall. And so how does that impact cities that are falling under similar conditions where they've just seen the property values of their office space plummet too? You're just looking at deficits and shortfalls all across the board, Mike, whether you're talking about cities or a town in Western Massachusetts.
When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can't avoid probate, and it may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trust can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699, or you can request it online at their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
It actually, making a connection here, Paul, with that South Hadley story for a moment, back to one of the topics we talk about all the time. These AI companies are having a really tough time finding places to build AI data centers. They need adequate water supply, electricity supply, and they're sweeping the nation trying to find places to build these things out and find communities that are willing to do so. If this article is right, that this is a canary in the coal mine and many other towns and cities are going to face these same sort of shortfalls because of rising costs in all sorts of areas and an inability to get funds from the state or federal government to cover those costs, it does seem to me that you have the potential to, solve that problem with the very deep pockets of the American tech industry. Right? Like
making a deal with the devil.
Yeah. I mean, really though, how many residents there would say, okay, would I rather have, my property tax bill go up by 50%, or I could actually see it go down by 20%, but I'm going to be living next to a giant data warehouse.
Oof.
I don't think they'd say
down for that.
No, I don't think they'd say yes, but you think about how many other towns across the country are going to be in a similar position, Boston included, and what solutions they have to fix those problems. We got to take a quick break, but a lot more to cover in the second hour of the Financial Exchange. Stay tuned, everybody. We'll be right back.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange as we kick off earnings season, kick off the week here, and kick off the blockade of the Strait of Hormuz by the United States Navy. Oil prices topping $100 a barrel as I mentioned, blockade or partial blockade, depending on who you ask, kicked off about an hour ago. West Texas crude for May contracts sitting at $102 a barrel, up 5.6% this morning. In bonds, we've got yields moving up slightly, not substantially, to 4.329% on the U.S. 10-year Treasury. And we've got a mixed market out there. Goldman Sachs bringing the Dow down with it, which is off. Let's take a look at Goldman Sachs just a moment here. Down 3% in early trading, bringing the Dow down about 0.5%. S&P is flat for the day. NASDAQ up 0.25%. Those Goldman earnings that were released just this morning indicated that the company was taking substantial loan loss provisions, meaning they have to account for what could go bad on the lending side of things, and it was the biggest year-over-year increase in those provisions since 2020. So some reading into that as some negative outlook for its own business. We will see, again, they did this in 2020, and then there weren't really any loan losses to speak of, so it doesn't mean that something will come true, but, an indication of some negativity from the executive team there in terms of what they are looking at. Taking a look here, I do want to check in on mortgage rates and gas prices as we continue to see the surge taking off here in oil prices. So on gasoline front, we continue to see the climb there. National average for a gallon of gas sitting at $4.12. That's as of today, according to AAA. And then over to mortgage rates, where we had started to see a bit of relief last week. We're sitting now at 6.4% on that fixed rate 30-year mortgage on average, which, again, has come down from the 6.6 range where we were just a few weeks ago, but still substantially higher than prior to the events in Iran. Paul, anything else catching your eye in terms of markets today?
No, I think you hit on the major ones, Mike.
So the big news for the rest of this week, other than the Middle East, which will pretty much override anything else that happens here domestically if something does happen. But bank earnings are on this week. We've got J.P. Morgan Chase, Wells Fargo, Citibank, BlackRock, Bank of America. Did I fail to mention any bank names? I don't think so. I'm sure there are others that are reporting that I don't care about quite as much. We will be hearing from Netflix later this week, and then the following week we kick off even bigger companies with a few defense companies reporting earnings. We'll have Tesla reporting. So a lot going on over the next few weeks, just besides the constant news flow out of the Middle East and what might be happening next there. Paul, piece from the Wall Street Journal. Economy's growing, jobs are not. And we've had this conversation a few times, but the journal or the authors there make the case that maybe that's all right. Like maybe that's not the end of the world if we are at a place where job growth is not happening. What's the main compelling case that they have?
Basically, there's two levers that you can kind of use to grow the economy, Mike, and job growth is one of the biggest ones that usually is the most easy and reliant for us to lean on. However, the other one is productivity as the other level. If you are more productive per employee and you're able to generate more goods and services than you were previously, that can lead to keeping costs down, and it's another way to sort of keep the economy on track and keep it moving. There is some skepticism that should be levied on this idea that productivity can make up for the fact that we know the labor dynamics that we sit at in this moment where baby boomers are retiring in droves. There's less immigration, so the labor supply has been constrained. So this addition of hundreds of thousands of jobs on a monthly basis, we just haven't really been seeing it. The counter to that is that, hey, because we have a plateauing labor market, we don't need to add as many new jobs as we did back in the 70s where these baby boomers were starting their work career. We needed about 185,000 jobs a month to be added. We now sit in a period of time where we could only need anywhere from 10 to 20,000 new jobs on a monthly basis, a really low hurdle to clear. You'd make up with some of those gains by being more productive. However, when you're talking about productivity, we have seen output per hour rise to about 2% over the last year. That's far higher than where we saw between 2007 and 2019, where it sat at 1.5%. But whenever you look at productivity gains, it's really spotty. It's cyclical.
Sure.
It's not something that is a guarantee year to year. Of course, artificial intelligence is probably in most people's minds as I go through this explanation, but it's too early to really get a sense for how much productivity gains we're seeing from AI. There's some arguments that have been made that we are seeing some, but it's not something that you can really count on. You need to train a workforce. There's a lot of reorganizing that needs to go on before you see these huge upticks in productivity, and they can fall off very quickly. So that is the counterpoint that's made, is that, hey, we might be okay because productivity may make up for this, but if you study history, it's hard to do that over a sustained period of time, productivity gains, that is.
I'll also point out a couple of things about all this. So, yeah, the math can kind of work where you don't need to grow the labor force and can still have a productive, well-functioning economy. Go look at Japan, right? Like, you can't say anything positive about the Japanese stock market, but you also can't look at Japan and say that the quality of life there is abysmal. Right, generally high quality life, long life expectancy, average income and average wealth that is quite healthy, and so a lot of things that can be drawn there that don't make it a complete disaster scenario. A few things concern me. One, our financial systems in the United States are not designed for a labor pool that stops growing. So we already have massive problems with Social Security and Medicare funding. You will need to completely revamp that formula if the assumption is that the labor market doesn't grow over the long term because we do not have an increasing population. So point number one there, you cut Social Security by 30% and all of those things I said about a stable economy go away. That's not the actual cut. What is it, a 20% cut to Social Security benefits if this all fails? I believe 7 years from now.
Yeah.
So, any degree of cut to Social Security or lack of ability to reorganize how it's funded, and all bets are off. The other piece that I don't think can be ignored is there's a lot being said about entry-level employment and the difficulties new college grads have finding work. And I don't think we're seeing something that's as bad as we've seen in other parts of time, 2010, post-Great Recession included. But what I will say is when societies don't find gainful employment for their youngest members of their society, things don't go well. And I'm on the very violent side of things, we can talk about the Arab Spring and the undercurrents there and what happened there. But even just domestically, think about Occupy Wall Street. I know there are a lot of high-minded ideas about why that was occurring, but in my opinion, why it occurred is because there were a whole bunch of 18 to 25-year-olds who couldn't find a job.
Right.
You don't generally have political unrest when unemployment is well under 5%. And so that is just one area that I want to, focus on. I'm not saying that there'll be riots in the street if we get the unemployment rate for young people too high, but you go take a look at a lot of different events throughout history, and a lot of them involve protests among young people, and they all oftentimes happen to coincide during real times of economic unrest for those same young people. And so, you got to be aware of that.
And it's really can delay household formation too, where if you don't get that entry-level job, it delays your career progression. And we already have a population that is dwindling or not growing as fast as it used to. And so now you put these potential new entrants into the workforce in a more difficult economic bind that delays that big, first-time home purchase and all of the household formation factors that are critical to keep the economy going.
Let's take a quick break. When we come back, we're playing a little trivia, and then we are going to solve the age-old debate of who had it harder, millennials or boomers. So if you want to voice your opinion, you can text the show at 617-362-1385. But the Wall Street Journal apparently already answered the question, so we're going to tackle that next here on the Financial Exchange.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange.
All right, time for trivia here on the Financial Exchange. Today is Thomas Jefferson's birthday. The third U.S. president had a long-term feud with another U.S. president that lasted until the day he died. Both feuding presidents died hours apart on July 4th, 1826. So, our trivia question, which U.S. president died on the same day as Thomas Jefferson? Once again, which U.S. president died on the same day as Thomas Jefferson? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
All right, the age-old question, Paul. Did millennials or boomers have it harder? And I'm going to start by saying this is a preposterous question, and obviously baby boomers had it harder, and we can talk about, the Wall Street Journal's piece here. But the entire premise of society developing is that the next generation has it easier than the previous one. Millennials definitely had it easier than boomers, who had it easier than the greatest generation, who had it a hell of a lot easier than all those poor saps that fought in the Civil War. That's the idea of a society improving, and it shouldn't even be debated. But I'll just define it with one statistic. I don't think we even need to go much further than this. 4% of millennials served in the military, or are currently serving. Millennial men, specifically. Would either of you care to guess what percentage of baby boomer men served in the military?
25?
40.
Wow.
10 times more via the draft during the Vietnam War. That's statistics according to the New York Times. What do we even have to compare compare to here, right? Like, this is not even close to a judgment call. We can talk about the economic disparities, and there is certainly something to be said economically about how, baby boomers happen to come into a labor market in a time of age that was more beneficial for buying a home, and, the stock market growth during the 30-year period that defined their key working years was, really transformative. But I don't know, man. I have a really tough time saying that my generation had it harder than baby boomers when 4% of us served in the military compared to 40% of baby boomers. Really tough for me to make that argument. You got a counter argument for me, Paul?
No, I don't have a counter argument. I don't want the pitchforks and torches to come out against me, so I'm not going to argue against you there. And I'm on board with you. And you go back to World War II generation, like you said, the greatest generation. It's a whole different ballgame. The argument has to be on the playing field, Mike, of economic conditions, right?
Sure.
Because you're right. From societal standpoint, of course, that was far more challenging. With
Didn't
the
have to deal with the AIDS epidemic.
Right. Okay. But if we look at the numbers of inflation and what are the costs of different things, and I'm not saying that there's a clear winner one way or another. I think it's interesting what the Wall Street Journal lined out here. One big loser of millennials are where they have bigger hill to stand on in terms of the difficulty is college tuition and fees. But I guess you could make the argument that their parents were sort of the ones who bared a lot of that burden. But of course, millennials did too in terms of student loan debt. The cost of things that we've seen for daycare and preschool, that's gone up pretty substantially as well. New vehicles, stuff like that. Some of the inflationary impacts. The housing market too is where they would have some more leg to stand on. Now, listeners might be saying, wait a minute, Paul, what are you talking about? We had mortgage rates that peaked at 18%. You've got a lot of these newer buyers sitting at a cozy 5, 6, 7%. But the price increases that we saw over the last 5 years, where houses went up 50% from 2020 to 2025, that has outweighed the impact from interest rates back in the 1980s. So again, I don't know if there's a slam dunk winner one way or another, but there are some factors that you could point to in the millennial camp. There are some factors that you could point to on the baby boomer side of things too, with a better labor market and things like that.
I think the easiest thing you can point to would be to say that to get a job that pays a similar inflation-adjusted wage today, you need a higher degree of education than you did 50 years ago.
Right.
That's like the most compelling case I can come up with is, if I want to earn a middle-class living, it is tougher today to do without some degree of higher education or trade skills than it was 50 years ago, when there were still, a good number of union manufacturing jobs that didn't require a ton of extra work. But then, again, think about the other side there. Like, okay, then I worked on a factory floor and, also had a pretty tough go of things at different stages of life. So, I generally am of the opinion that each generation has it a little bit easier than the previous generation. And if you don't want that to happen, and if you're poo-pooing that, or if you're cheering for that to not be the case, you're pretty much cheering for the demise of American productivity. You don't want that to happen.
The U.S. economy relies on that. And if you're an investor in the stock market, you want to see continued productivity growth, because that keeps companies moving forward, growing their earnings, and as a result, your share in them growing. That's what we need to keep things moving.
So, boomers, you won this time. That's
but we'll be back.
Yeah.
Texter out of the 978 area code to the number texting us 617-362-1385 says, "Is this even a question? Millennials and their debt load take the cake."
Oh, okay.
Yeah,
All
millennials
right.
and their debt load taking the cake. Okay. Again, no draft.
But economic. Let's just keep it economic. Financial exchange, right?
Yeah, Wall Street Journal.
I don't know. It's even tough there for me to come up with a real compelling argument. Yes, you do have a massive additional debt load that that baby boomers did not get faced with, and so that is an extreme challenge. Let's think of some of the biggest financial crisis events in our lives, though. Was the Great Recession more impactful on boomers or millennials? I'm going boomers.
Boomers, yeah. some of us were hiding in school.
Right? Like, I don't know. I stack all this stuff up, and there is a very compelling argument that today, and for millennials, you were in many ways encouraged and would have otherwise been challenged had you not pursued a higher level of education than the previous group, and the costs for that education have gotten absolutely ludicrous. But I just don't feel that addresses the necessity choices that had to be made, right? Like, you chose to go to school, you chose to go to that school specifically and take out all those loans. And same goes for the mortgage piece. Like, a lot of these are quality of life decisions rather than, oh, I got drafted and I'm going to Vietnam.
You keep coming back to that. Yeah. We're never going to win on that. But
no, like I just don't think any of these other arguments hold any water when compared to that one. It went through economically. You went through the 70s and 80s, high interest rates, slow economy, high inflation. I don't think even any of the real defining economic moments for millennials compared to the ones that boomers went through. So there's the end of my argument. Sorry to cut everybody off. If you want to text into the show, you can do so as well. Trivia answer and Wall Street Watch coming up next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member member can help to keep their finances in order.
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it, because I might not have the same accounts that I used to.
Right, and the guy does lay that out of, hey, how do I document changes in here, because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes, and so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, after peace talks with Iran came up short over the weekend, markets today are mixed after President Trump ordered a blockade of the Strait of Hormuz that took effect at 10 o'clock this morning, sending oil prices higher. Wall Street's also sifting through the first batch of bank earnings from Goldman Sachs this morning to kick off first quarter earnings season. Right now, the Dow is down nearly 0.6% or 277 points. S&P 500 is flat. NASDAQ up by about 0.25%. Russell 2000 up by about 0.33%. 10-year Treasury yield up 1 basis point at 4.333%. And oil up 6% higher, trading at $102 a barrel. Goldman Sachs shares dropping over 3%. After the bank reported a 19% increase in first quarter profit driven by record banking and market revenue. More bank earnings will follow tomorrow morning from JP Morgan Chase, Wells Fargo, Citigroup, and BlackRock. Meanwhile, after sliding more than 12% last week over fears that it will lose out to newer AI competitors, Palantir stock rebounding nearly 4% today. Elsewhere, Williams-Sonoma upgraded by Goldman Sachs, sending shares up by 1%, and Goldman Sachs also downgraded Best Buy, citing risk to sales post first quarter as higher memory costs work their way into the price of computers. Best Buy stock is falling over 3% on that downgrade. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which U.S. president died on the same day as Thomas Jefferson? That'll be John Adams. And Earl from Brunswick, Maine is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Earl. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
So, Tucker, did I stoke any anger from our listeners on our millennial versus boomers debate, or was that the only text?
Debt is voluntary. Conditions in the market, such as rates and inflation, are subjective. The debt argument is invalid.
Ooh, okay. Good. Firing shots against each other, not against me. That's good.
Yeah. Millennials were on their parents' health insurance until 26. Gen Xers were on their own at 18 and had already been working since their early teens.
Again, every generation has a little bit easier than the previous one.
Boomers just had to compete with the C student.
Except for whatever generation has to deal with our nation's ballooning debt. That one's in trouble.
Our kids are screwed.
Little audible here, Paul. I want to talk about Gen Z adults. So Gen Z adults, those between age 18 and 28, say that they're the parents of those kids say that their kids are still relying on them substantially for money, housing, other support, according to a 2026 Wells Fargo money study. First of all, does this surprise you at all based on your work with parents of 18 to 28-year-olds? And is it any substantially different from previous generations of 18 to 28-year-olds? Because I'm not really sure that it is. I mean,
no, you know who had it the hardest? Gen Z. They beat millennial and baby boomers.
Yeah.
This is the one that they have it the worst.
Yeah,
I think that it's symptomatic of the age ranges, Mike, to a degree. Now, maybe you can make the argument, and this kind of dovetails back to like what we were talking about before with the housing market, that housing costs have gotten so out of control. Maybe they're more reliant upon their parents than we may have been when we were looking for our first apartment rental. But I think in general, 18 to 20 is a period that for at least most kids out there from 18 to 22, 23, you're pretty reliant upon your parents for a bit of help. And maybe that has ticked up a little bit, but I'm not willing to fully say that this is far different than what it was before. I feel like kids in this age range have always been reaching their hand out to parents asking for help. Now, maybe baby boomers would say differently, that they had to jump into the workforce far faster than their more recent counterparts.
Yeah, I mean, that's undoubtedly true. And they also had to, walk 3 miles uphill both ways in the snow to get to school. So it's a different story. But I think every person's experience is a little bit different on this front. The relevant question to me, though, is how many of these families that are supporting their 18 to 28-year-olds can actually afford to do so? Because that's the piece that I see actually pretty frequently. And we all know, I think most parents admit, when push comes to shove, when their kid is in really dire straits, they open up the wallet and plan the checkbook. But I think it's one of those under talked about areas, especially when it comes to financial planning. Rarely do I have a new client come in and say, and yeah, by the way, I need to budget $2,500 a year because realistically, that's how much I throw into support for my 25-year-old every year when I shell out, gifts for birthdays and Christmas. And, I'm going to almost certainly help them out when they get a divorce 30 years from or 20 years from now. And the question is, how do you prepare yourself for these things and put guardrails around the degree of support? The divorce of a kid is one that I have seen really firsthand when parents are shelling out tens of thousands of dollars to help somebody through a really traumatic life event.
Yep.
And in some cases, it can really throw off your own retirement. How do you address these sensitive subjects with clients? Like, is it just about putting those guardrails up?
Mike, for us, it's about having the uncomfortable conversation. And I can think of a couple examples off the top of my head where a parent who has a child that took on a lot of student loan debt, but then pursued a career that wasn't going to pay a lot, that was kind of going to be a state employed, a government worker where their raises were not going to be that significant. And I had to have the candid conversation that you in your retirement position, the parent, cannot afford to subsidize this child more than this next year. This really can't continue because then you're going to thwart your retirement that you've worked so hard for. Ultimately, all we can do is bring up the subject. Our job as planners is to point out something that could be problematic to the client or the parent in this case. But I understand, having kids of my own, and you probably do too, that I probably would go to the end of the earth to really help them. But at some point, you're doing them a disservice. It's our job as advisors and planners to mention that this is going to thwart your financial plan if you don't deviate from the course that you're on. But ultimately, all we can do is lead the horse to water. You can't make them drink, right? I'm not going to tell someone to stop. All you can do is advise them. These are the consequences of your actions from a financial standpoint.
Well, there's always several levers to pull, and that's what I always go back to is, okay, if it is going to be the degree of support, are you prepared to work another year? Are you prepared to live a different lifestyle than you were planning on in order to focus on this other priority instead? The most important thing with all of this is just the foreknowledge that this is the risk you are playing into if you're spending on X, Y, or Z. If you have those types of questions, you're trying to figure out what can I actually afford to do while not jeopardizing my own financial future, give us a call at Armstrong Advisory Group. These types of things, believe it or not, this is what we work with our clients on a day-to-day basis. The number is 800-393-4001. I know it's not fun stuff to talk about, but it is absolutely a necessity. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Great news for those who work for Meta. If you were worried that you had, too much oversight from your boss, they have great news because they have now created a second boss. Meta has built an AI version of Mark Zuckerberg to interact with the staff. And I cannot imagine the meeting that people went to where they said, oh yeah, this is a good idea. We should give everybody an AI version of the founder of our company so that he can oversee them and ask them questions. Or I guess the other way around. What?
What are they doing?
What godlike debacle do you have to have in your mind to say that this is a good idea?
The metaverse, now this, they just continue to come up with ideas that make you scratch your head. What benefit does this possibly serve? And why would you want to attribute it to yourself? Imagine as a boss replicating yourself in AI form. Like one of you is enough. I think we can all acknowledge. Yeah.
The pure hubris of
when you're worth
what this
hundreds of
company
billions
needs.
of dollars.
You know what this company needs is an investment of a few $1 billion to turn me into an AI version of myself, because I'm so incredible that my staff needs to be able to interact with me on an hourly basis.
One of you is not good enough. Let's put out hundreds of thousands.
Yeah, this is a bad idea. Good use of AI, bad use of AI. This is going into the bad use bucket. I liked continuing to hear stories like this that we can categorize as good or bad uses of AI, and this is very firmly in the bad. Let's take a quick break. When we come back, a little bit of Stack Roulette is next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
Time for a bit of stack roulette here, Paul, and I'm going to kick things off with more AI discussion and just the supply chains and shortages that we are already seeing play out in AI. Now, we all know the cost of semiconductors and memory and all sorts of different equipment have been skyrocketing, but there was a market for computing power that I did not know until today existed, which is the spot market prices for access to NVIDIA's highest end GPUs. So, of course, this does exist. I knew that you could access NVIDIA cloud computing power, but there's inefficient market for it where you can basically rent computing power from NVIDIA's Blackwell generation chips. The cost to do so for an hour is $4.08, which, frankly, I just don't know the return there, so I have no idea how to judge this. But what I do know is that it's up 48% from 2 months ago. The cost to rent the GPUs for 1 hour is up from $2.75 2 months ago. The pace at which this continues to just blow past expectations in terms of both demand for the technology and then also what companies are now putting out is just fascinating to me. And I don't know, 6 to 9 months ago, the thought process going through my mind is, wow, these companies have been bid up to the point they're so expensive. How is it possibly going to justify the share price? To the point where it's not that I'm, unconcerned about that, but the greater concern seems to be now, if demand is really this high and this technology continues to evolve at such an incredible pace, what industries are going to be wiped out and what shortages are going to be out there in the market based on just a lack of availability of power generation and computing power to accomplish all these things that these companies want?
No, I think one of the things that we had a fear on previously is that when are we going to see significant impacts from this technology, that those have been sort of assuaged as we've headed into 2026. We have seen the release of tools from Claude and others that really point to the fact that this technology is going to make a significant impact and disrupt industries. But on the other end of it, as much as we've seen the promise of that, I have the fears of sort of just the general picks and shovels that are required to build out the infrastructure to keep up with the demand for this technology is not going to keep pace. And as a result, the U.S. is going to find itself in a difficult spot where we've talked about, Mike, on the show, data centers and just sort of the leeriness that now states and municipalities are having on building out computing capacity in their backyards. That flies right in the face of trying to get agentic, users within a system developed, or just building out any of these models in general when you're competing against China and other areas of the global economy to keep pace. It's something that is going to be a huge bottleneck and continues to rear its head when you read an article like this that, hey, the demand is far outpacing the supply. I'm sure there will be a reverse phenomenon where maybe there's a glut of too much supply, we saw with broadband back in the late 90s, early 2000s. But for now, we're in the supply crunch cycle for sure, and you can tell by the renting cost on that end of things.
Yeah, I will say for a moment that the history of U.S. capitalism is that we get infatuated with new technology, way overbuild the heck out of it, and then are left with an oversupply of that technology, whether that's TV, radio, railroads, or the internet. But right now we are in the crunch time moment, and the question. Well, there's a lot of questions, but one of the looming ones to me is what matters more: the latest and greatest generation of semiconductor, which we have the advantage of, or the ability to generate massive amounts of electricity, which China has the advantage on.
Steamroll citizens' houses to build the new supply. Yeah,
darn right.
Without a doubt. 3 men are arrested in a $1 million Lego theft in California, Mike. Not sure if you heard this breaking news over the weekend.
Yeah,
but
were they nerds or were they geeks? It's an
they're
important distinction.
They're opportunists, and what I didn't realize about Legos is they've almost kind of created their own alternative investment class, where if you invest in unopened Lego sets, there's data out there that shows you've generated returns of 11 to 15% over, this is from 1987 through 2023. Other studies have found that it's somewhere around the low double-digit returns. I did not realize until the last year or so, where a family member of mine sent me an article as a joke. Hey, are you guys considering Legos in your client investment portfolio? They are something that have been really resilient and a good way to make money, and that's why you have this attempted theft, which isn't the first of its kind. There has been other instances where people have gone out there. In October, for example, police said they discovered tens of thousands of Lego pieces at a California home and arrested a man who trafficked the stolen collectibles. So yes, listeners out there is a stolen collectibles market for Legos. There's no way to track them when you resell them
unless you step on them.
Yeah,
right.
Then
you'll find them real quick.
Yeah, you find them real quick.
They really
just
leave
follow
a market
the screaming guy.
But there is a market for stolen Legos to be listed on other sites and to get a profit on. And Mike, we've learned time and time again, Americans will stop at nothing short to make a profit. Whether it's Legos, anything you can imagine, we will sell it and try to make money on it.
I'll tell you what, this heist, just, practically speaking, makes so much more sense to me than the Taunton thieves that stole 40,000 pounds of lobster meat.
Right.
At least this one, I can hide it out in a warehouse for a few months and
you can build a warehouse out of it.
I am genuinely impressed by whoever managed to steal the lobster meat and then work it right back into the system. I shouldn't be impressed. Impressed is the wrong word here.
You can use impressed.
I don't condone,
tip their cap.
Stealing 40,000 pounds of lobster meat valued at $400,000. But again, I was just floored by the ability for them to work it into the market. And then a bunch of people texted like, "You're so naive. You've clearly never been close to the mafia." Yeah. So there you have it. That is all the time we have on the financial exchange as we close in on the noon hour. Stocks not doing much differently than they did when they opened. The S&P is as flat can get. The Dow Jones Industrial Average off by 240 points, or 0.5%. And the NASDAQ hanging on to gains of about 0.25% as we close out the show here. We will continue to have big earnings reports for the rest of this week, so stay tuned. We'll be back tomorrow, and have a great rest of your day.